Good morning. Today is Thursday, November the 5th, and the time right now in Singapore is 10:35 in the morning. And what a day it was overnight. And we have been expecting the FOMC meeting outcome, and basically the market was actually expecting another rate hike, a very big rate hike. Market was expecting at least a 75 basis point hike, and they were not disappointed. It came in exactly at 75 basis point. Currently, the US Fed Fund indicative rate is at 4%. Okay, so this is the highest it ever been, and this is the fourth time in a row in which the Federal Reserve has high interest rate 75 basis point. It has never happened before, and the market was actually expecting what happened next in December. December will be the last FOMC meeting, and market expectation is that maybe the Federal Reserve will take its foot off the pedal, because in Canada they have done that. They have actually hiked. Remember last week the Canadian Bank of Canada actually hiked a rate less than what the market expected. So this gives rise to the expectation maybe the Federal Reserve will do the same thing. However, during the press conference after the rate hike was announced at 2 a.m. this morning, the Federal Reserve Chairman Jerome Powell did not give the market what they want to hear. Basically, what he is saying that he's likely to look at the data, and data means they will look at the employment numbers, they will look at the CPI numbers, they will look at the PMI numbers before they come to a decision. So that did not give the market what they want to hear, which is basically to tell the market that yes, maybe they will be more concerned about the economy tipping to a recession, and maybe they will slow down their rate hikes. Okay, so that did not happen, and eventually the market went back down even lower than before the rate hike. So the market before that was actually rising, okay, in the immediate aftermath of the rate hikes. The press conference came in half an hour after the release of this information about the rate hike. So at 2:30 morning, when the Federal Reserve Chairman was speaking, somewhere in between his speech, he did mention very briefly that it is unlikely to have a lower rate hike come December. Market starts to slide from the day high all the way down and close all the way at the day low. Okay, so we can see there was an outside day for the, at least on the long on the 60 minutes time frame. You can see market actually registered a new high in the Dow Jones at 33,072 before it closed back down at 32,139.8. Now, if you look at the daily time frame, this is quite indicative. If I blow up this particular bar here, this is a very, very bearish bar because it is an outside day. Okay, on the daily time frame, it's an outside day. And then if you look at the weekly itself, this could be setting the stage. Okay, but however, the market need to go down below the last week opening to actually give us a definitive that the signal the market top has already been in place at 33,071. That low we have to watch by the end of tomorrow's trading is at 31,187. So if the market continue to drop another 1,000 point, okay, from now until Friday closing, that will be the end of this counter trend rally. So technically, I think there is still the possibility the market may rebound higher, okay, because the next major number to watch out will be the non-farm payroll, which is happening tomorrow. And non-farm payroll could actually give the market another chance, okay, to reverse itself. But because the Federal Chairman has already mentioned, unless the number is so drastic, we need to see a deteriorating job market. But what we are seeing right now is that the US job market remains very, very healthy. The number of new jobs created actually has not gone down, okay. Yesterday, we also have the release of the ADP number, which is the advanced, not advanced, I would say most people take it as a glimpse as to what the non-farm payroll will be like. The number came out was so good, okay? So meaning to say more jobs are being created. So that means that if there is any clue, that means tomorrow's non-farm payroll number of new jobs created may actually surprise the market to the upside. That means to say the equity market may come down, because if the job market remains healthy, okay, that means the Federal Reserve will have no choice but to continue to hike rates aggressively, because they need to destroy demand. If employers are still prepared to hire, that means demand is basically quite strong, okay? So that means there's indirect way of inferring if more jobs are being created, okay, that means their rate hike policy has not worked. So they have to double down on that. So we will have to watch tomorrow. So tomorrow will be the key, and tomorrow is the last trading day of the week. So again, like I said, if the market drop another 1,000 points, this rally could be all but over. Okay, so but again, we will have to watch tomorrow's number. Today, I think the market will take a rest, nurse its wound, get ready for tomorrow. Okay, S&P 500 did not create a new high for the week. The high traded was actually at 3,911, which is actually registered on Tuesday. So unlike the Dow Jones, which actually have a new high for the week before it come back down, the S&P 500 did not. Okay, by and large on a 16-minute time frame, this is also an outside bar. Okay, you can see this high here, which was actually registered just after the rate high was announced, and it closed at the day low. So this is definitely not a good sign for the bullish case, meaning to say that if the market continues to slide lower, maybe the possibility of further losses over the next 48 hours remains very possible. Immediately, I think the market may be looking for some kind of support. The nearest support will be at 3,647. Okay, this will be the immediate bottom here. Over the Nasdaq, now Nasdaq is even worse than S&P because this week we do not have a new high. This high at 11,681 was actually registered last Wednesday, 1 week ago. So you can see this market has actually retraced back in a three-wave pattern. However, it has actually exceeded my expectation. I was expecting it to stabilize somewhere near the 10,960 levels. Okay, but it actually has been a lot worse. Market closed practically at the low of the day. So if this is the momentum, maybe the market will continue to slide lower. What is the next target? The next target will be somewhere between 10,700 levels. So do watch out for these levels here. Another 200 points more to go. So over in Asia, we can see that the market actually reacted to the downside. Yesterday, we have a good run up in terms of the Chinese equities, also directly inferring Hong Kong equities. So yesterday, Hang Seng actually managed to recover to 15,867 based on one tweet. A mysterious tweet appears in Weibo saying that the Chinese government is having a meeting and possibly looking at the possibility of lifting or at least reducing the severity of the lockdown policy. So that piece of that mysterious tweet actually caused a 450 billion recovery in Chinese equity. So yesterday was a good day for Hong Kong and was a good day for Chinese equity. But today, when after looking at how Wall Street reacted to the rate hikes, the market is coming back down again. So this morning, the Hong Kong market actually opens with a gap down. Now it's testing the 15,500 levels. This is where we are currently. So when it go down, this market is basically pretty weak, and there is no strong fundamental behind the rise, all based on a mysterious tweet. So that is not a very firm foundation to build this counter rally. So by and large, still continue to avoid this market if you can. Okay. Over in the Shanghai Composite, you can see the market has a major rally all the way to 2018 before this market comes back to reality as Wall Street closed on a weak note. So by and large, I think this move here may have some momentum behind it. So do not rule out another extended rally or counter trend rally in the Shanghai Composite Index. However, the major hurdle to clear will be the 3,100. Okay, this level will be maybe a mountain too far. Okay, so by and large, I think this momentum here, because of the sharpness of the rally, that means to say there is real momentum behind this move here, regardless of what's the news that caused the market to rally. I think it has the possibility of another extended rally. Okay, not so much to clear the 3,100, but maybe to challenge it. Okay, we'll see how far it can go. Over the Nikkei, we can see that Nikkei is closed today. There's a public holiday in Tokyo today, so there is no market. Okay, but by and large, this three-wave counter trend rally have the potential to go all the way to 28,000. Okay, maybe even 28,500. So this bracket of prices is where I'm looking at for the market to top out. Okay, so since there's no market, we will have to see what happens tomorrow. Okay, over in the currency market, the dollar actually have a very volatile day. the initial reaction to the Fed fund to the rate hike was actually the dollar actually went down to as low as 145.67, and then as the press conference was in progress, where the Federal Reserve Chairman give hint that he is still looking at data before deciding on what to do with the rate hike, whether he want to maintain the current aggressive stance, or maybe the market wanted to hear was maybe a slower rate hike. Okay, but he did not deliver that, so the market went back up again. So the dollar actually recovered from 145.67 based on the idea that the Federal Reserve is still looking at the numbers, okay, looking at the data to see if and when they can take their foot off the pedal. Obviously, at the current moment, inflation is still raging away because the target inflation rate is 2%, and now we know that the existing CPI number has come down from the high from 9.1% now to the lower end of 8%, but it is still very stubbornly high. From where we are right now, northward of 8% to 2% target rate, I think we have to resign to the idea that going into 2023, we will still see very elevated prices in the States and by the extension for the world. Okay, the fact that the sterling actually at one point was at 1.1564 was a reaction to the rate hike in the immediate aftermath of the rate hike, but you can see the sterling actually come back down to 1.1375, and the structure of this pullback from the most recent high, which is last Thursday at 1.1645, appears to be still corrective in nature, and there is every possibility that the market may go back down a little bit. My ideal target since 48 hours ago, I've been talking about 1.135 to 1.128, which is this level over here. Hopefully this level can actually hold, because this is a cluster of prices that actually held before the market rally up to the week's high last week. So there's every possibility the market may come back and revisit this level, hopefully at the lower end of 1.128. So that will be a great level to actually pick up more long position, because the structure appears to suggest that there is one leg missing in this counter trend rally. So I'm optimistic that there will be there's very high likelihood that there will be another extended rally beyond 1.1645. Okay, so do watch out for this potential move here. Whereas in the euro dollar, the pullback from the last week high at parity is a little bit deeper than I expected. Market actually went down below 0.9850. Okay, went up to 9810, and now it is actually hovering just above this key chart point here on the short term at 0.98 even. Okay, so if this level can actually hold, maybe the market can actually stabilize. But if you ask me whether I want to buy this currency pair, my answer will be no. If I have a choice, I will rather put my my bet on sterling going higher rather than euro. Okay, because the European economy is actually pretty bad. Okay, so there's no fundamental reason why I should want to buy euro if I have to do a counter trend trade. Okay, Aussie has also fallen back from the high of 0.65, near the 0.65, and this was obviously this high was registered in the aftermath of the rate hike decision, and the market went down to 63 cents, very close to 63 cents, and it may appear to have unfold in a three-way, and if it's so, it has maybe it will go down a little bit to maybe 0.63 even. If we can go down to 0.63 even, I think that will be a more sensible level to look for a long position. Yes, you can actually consider jumping back in on the long side, because this counter trend does not appear to be over, and there is every likelihood that you will challenge the 65 cents and beyond maybe next week. Okay, over in the crude oil market has a good run. Last night crude oil actually stayed traded above $90 per barrel to a high of $90.36, and then it pulled back a little bit, but by and large you can see that this rising channel appears to be still in place. If I have to shift the channel here, maybe it will look something like that. Okay, maybe I have to adjust this. Oh well, I will do the adjustment later on. But by and large, you can see the prices has been trading higher purely on the observation that recent high has been higher than the previous high, and recent low has been higher than the previous low. So this is a classic definition of an upswing. So by and large, I do expect continued strength in the crude oil prices to challenge the $100 per barrel eventually. So I'm still holding on to my long crude oil position. because I still believe $100 per barrel, it is within the realm of possibility, at least for this month. Okay. Over in the precious metal market, it was a bit of a disappointment. Market actually was going up. At one stage, it was $1,669.50 in the aftermath of the rate hike. But then, as the press conference was progressing, the market realized that there is not going to be a pivot, and prices start coming back down because dollar started to recover. If you remember earlier on the dollar yen chart, it's so obvious, and that was quite representative of how the dollar is behaving. Dollar strength has come back, okay, and that being the case, this precious metal price, especially in regards to gold, couldn't maintain its upside momentum. So eventually it slammed back down to 1,630, which is actually not a good development. I'm still unfortunately holding on to my long gold position. I was hoping to exit my gold position if the market can sustain above 1,675, but alas, that's not to be. So we will see. Over in the silver market, if you look at the overall structure of this silver pattern, it does looks very similar to the crude oil pattern. Okay, we have higher highs and higher lows. So rather than being very bullish on gold, I should have been more bullish on silver. Unfortunately, I have no position in silver, so now hopefully the strength in silver can actually spill over to gold and maybe assist gold to the upside. So for the time being, this market remains pretty positive. I would love to see the silver prices continue to edge higher. We take each day as it comes, okay? Because the unless the dollar started to weaken, there is very little hope that the precious metal space will actually recover. So last night we have a low of $19.11, but technically when you look at it, it is still lower than the previous low at $18.90. So that's a good sign. Okay. Over at the crypto space, we have quite a volatile move. Bitcoin itself actually managed to recover back to above 20,800, okay, and then it couldn't sustain and come back down. So you notice this high here is slightly marginally lower than the previous high, which is again lower than the previous high, last week high at 21,106. So by and large, you can see this market appears to be wanting to come back down. So yes, yesterday the market managed to hold at 20,000, which we have seen over the last few days. We can see 20,000 there about has actually held the market. So last night's bottom at $20,050 was no surprise, but I was expecting a price to actually dip a little bit lower down to 20,000, even to 19,100. So if the market does slides back, it is still good for a buy, in my opinion, because I do believe that this rally does not appear to be over yet. Okay, there is the possibility it will continue to chuck higher. But I think the catalyst is definitely not going to come from Bitcoin. It's going to come from the other coins. Ethereum has been very, very bullish for as far as $1,150 was traded back 2 weeks ago. So you can see that this momentum appears to have unfolded. This pullback is unfolding in a three-wave, and it actually hit my target. Okay, my target was at 1,502. Market went low last night was 1,501 and 70 cents. So the first to recover, if it ever recover, based on the idea that it has already completed a three-wave pullback and hitting my target, okay, at 1,502, this is a better candidate for a resumption of the uprun. Okay, so if I want to go and long crypto coins, I think this will be one of the candidates to consider. Yeah, ideally it come back down again and give us another shot, but if it doesn't, then I won't be surprised it's continuing to trade higher. The first clue that market has bottomed is this price here, 1,623, which is yesterday's high. If the market can take out this high, now can you imagine yesterday's we have a high and then a low, and today we have a new low, and then market close higher than yesterday's high. That will be a key reversal. Do keep that in mind. Okay, over in the Binance coin has been the most stable, even better than Ethereum. You can see the market pullback, okay, is still very, very corrective in nature, although it has not hit my target. The target is $306.80. So that aside, there is still the possibility the market can slide back down. Okay, so if it does, then this will be a great level to pick up some long position in the Binance coin. Binance coin has been very, very, very firm. Now, do remember that Binance actually is a stakeholder in Twitter, because I think they funded Elon Musk to the tune of $500 million in his takeover of Twitter. So if Twitter do well, or the news coming up from Twitter is positive, that could rub over into the Binance coin itself. Ripple actually have a messy day. The market actually went lower. Okay, it did not quite take out the previous day high at 46 cents, and market came back down to actually register a marginal low for the last few days. You can see 44.5 cents. So this is a coin whereby I think it's still struggling to find direction, but I wouldn't dare to short this coin, because this coin has a fundamental that's waiting to be released, which is the verdict of the litigation case between SEC and Ripple Lab. So I would not dare to short this coin here. And but the fact is that the market has not been able to go up significantly. So the structure of this Ripple coin, it is not ideal. Okay, so I won't be looking at Ripple for the time being. Now, Dogecoin has been also very positive, very much like the Binance coin. Now, Ripple coin, this Dogecoin has been very closely linked to Elon Musk, because we know before his takeover of Twitter, he has always been tweeting about Dogecoins. Okay, so when the Twitter deal went through, okay, Dogecoin actually saw a surge in prices, and this pullback from the high of $15, 15 cents, 15, almost 16 cents, has been very corrective in nature, and it actually hit my target. My target was 0.1219. Market went down to 1215. Okay, and then a bit more, and then it stabilized. Okay, so very much like the Binance coin, it has the potential to be the one of the first to recover. If the price recovers above 15 cents, for example, I think that will set the stage for higher prices, and it will surpass the 15.88 cents in the near future. So there you have it. This is all I will be sharing today, and I'll see you again tomorrow. Bye-bye.